Well, I mean, everything they're doing is a mistake. I mean, there's a lot of problems with the economy. And the reason the economy has so many problems is because the government has made so many mistakes. But what we're experiencing now is just the consequences of all the can kicking. See, whenever the government creates a problem, they don't want to deal with the problem because that's politically too dangerous. All they care about is kicking the can down the road so that it's somebody else's problem after the next election. Well, all we've done is catch up to the can. And every time we catch up to it, it's bigger. There's more problems than it had before. And so that's what we're experiencing now in the economy, because when COVID happened, we really gave the can a big kick, because COVID really exposed a lot of the problems in the economy in an even bigger way. But again, rather than dealing with those problems, just like we failed to deal with them after the housing bubble popped, or we failed to deal with them after the dot-com bubble popped, we again made the same mistake, which is we printed more money, we lowered interest rates, right? And we gave everybody more money to spend so they can buy more products that they didn't make with money they didn't earn, all in order to keep this whole house of cards from falling apart. But it is going to fall apart. It is impossible for the government to do this indefinitely, because the amount of money they have to print eventually becomes fatal to the value of the dollar. Inflation is the expansion of the money supply. That's the actual definition. And so money supply is growing, 20% a year, 30% a year? It's really big. Now, as far as what is the actual increase in the cost of living, the consumer prices, which is what most people think about when you talk about inflation. Well, the way the government measures it using the CPI, if you annualize, the first half or the first 5 months of this year, I think we're running at about 8% a year increase in the cost of living. But I don't think that accurately reflects what's really happening with prices, because I don't think the consumer price index really captures the true extent to which prices are going up. So my guess would be that right now we have annual inflation probably between 10 and 15%. Right now, that's what Americans are experiencing as far as their cost of living, which certainly rivals or exceeds the worst of the 1970s. So we've already got that. The thing is, the Fed and the government is telling us, and everybody is telling us this, that it's all transitory, that this is all just related to the reopening of the economy, and so we don't have to worry about it. But that's not why we have this. The prices are going up because of what the government did in response to COVID, not because of COVID, not because of the reopening. It's because of all the money printing. It's because of all the deficit spending. Yes, the fact that we're not producing as much stuff is part of the problem. A lot of people aren't working, and so they didn't make stuff. But the problem is, as we made less stuff, we printed more money. That was a huge mistake. We should have printed less money. The Fed should have drained liquidity as the economy contracted, not added it. They just threw gasoline on the fire. So deflation is going to get much worse. What people are experiencing now, the only way this is transitory is that we're transitioning to much higher inflation.
5.3% CPI, 4% core inflation. What's your read on these numbers?
Well, first of all, you have to take them in context. I mean, this is the first report that we've received now in 9 months that was lower than expected. So they were looking for 0.4 for the month, and we got 0.3. But, most of the time we get a much bigger number. So a lot of people are taking a lot of solace in the fact that we finally have one number. We broke a 9-month streak of having worse than expected numbers. And now we get one number that's not as bad as expected, and somehow we're out of the woods. I think that's ridiculous. If you annualize even that 0.3, that annualizes to 4% inflation a year, which in and of itself is pretty bad. But if you look at the actual increase in consumer prices in the first 8 months of this calendar year, and then annualize that, that's 6.4%. So we're still triple the 2% that the Fed is claiming it's the target. It says it wants to be slightly above 2%, right? Well, we're not even in the neighborhood of 2%. And the number would be much higher if the government was not using owner's equivalent rent, which is, like a third of the index. And this number is supposed to represent housing costs, but it doesn't even come close. Because if you look at what's actually happening to rents or home prices, we've never seen these kind of increases. These are double-digit increases in the cost of buying or renting a home, yet none of that is reflected in the CPI. In fact, the government claims that shelter prices are rising so slowly that it's actually weighing down the CPI. The number would be much higher, obviously, if we use the real rate of increase of rent or home prices, not what the government is pretending the increase is.
Have we got to the point where we overdose on QE and money printing and all that? But certainly if the Fed were to stop and let interest rates rise to, where the free market would put them, the stock market would crash, the housing market would crash, the economy would implode, banks would fail, much, much worse than '08, and the US government would be forced to default. I mean, it would have to default on its obligations to pay benefits like Social Security and Medicare. It would have to default on government pensions, on treasury bonds. I mean, all of these chickens would come home to roost. So they're not going to let that happen, right? The politicians at the Federal Reserve are going to do everything they can to keep blowing air into this bubble until it explodes. And
So
when that happens, the dollar, implodes, because they can keep printing money as long as the world keeps accepting it, right? They can keep giving everybody money to spend as long as the people that actually make the stuff are willing to exchange it for the money we print. Well, at some point, it does, they won't want it anymore. And then, the music stops. Well, I mean, it's not what you make, right? It's what you keep. I mean, we all know that. And, it's an American's patriotic duty to minimize their taxes, to pay the lowest tax that they could legally pay. And that's not me, that's the Supreme Court said that. So I'm being a patriotic American. And personally, I believe that any money the government gets, the government wastes. I think money in my hands is going to do better than money in the government hands. And that applies to every American. Keep the money that you earn. But it's not just the income tax, which I think is so debilitating to the economy. It's the inflation tax. We're talking about inflation. Inflation is a tax. If you strip it of all the jargon, that's what it boils down to. Because governments have two ways of taking money from us. They can take it through taxes, where they take physically our money, or they can take our purchasing power through inflation. They just print money and they spend that. But that means the value of our money goes down because prices go up.